Okay, guys, look, what do we have right here? Come on, man. Tell us something before we're going to start this. Look.
Dude, it's always a pleasure to speak with you, Martinez. I'm in Thailand. You're all the way over there in the UK, and we haven't connected since November, so it's been about a hot 3 months. So I think we have a lot to catch up on.
Man, this man is a beast. Look at him. Like, I'm gonna read some stuff out, and it's super cool. Like, this is Matthew Baltzell. For you who is not familiar with his face, he's a real estate analyst and team member of the Boardwalk Wealth. Love the name, by the way. A private equity firm located in Dallas with 1,257 units under management. Because previously, when we talked on July last year, it was 1,063, so it increased the number. So that's a good sign. He's responsible for market research, due diligence, acquisitions, and investor relations. He participates in identifying, analyzing, and advising in all phases of the acquisition process. And he's also a host of Real Estate Journeys podcast. So, man, come on. Just happy to have you on the show again. I appreciate it.
Pleasure to be here, Martinez. Thank you for having me.
Awesome. So again, for you who didn't see the first interview, you can go and check it out. I'm going to put a link down below. You can check the previous interview. But I want to just take it a little bit different. Again, I want to talk about, real estate and, your journey in real estate so far. But for the people who are listening for the first time, can you give them just your background story? How did you discover real estate in the first place?
Yeah. So I got started back in 2008 with my mom. I'm born and raised in Denver, Colorado, and my mother started a family mom and pop business. We basically fixed and flipped homes, and I helped her manage about 10 single family homes. Nothing major. There was no bird strategy, nothing like that. It's like, hey, go run up, grab a flyer. Let's look at it. Let's go to the open house. How can we improve this? Let's put some lipstick on a pig, try and flip these things, rent it out of a couple of them, right? And it wasn't even called the bird strategy back then. As a lot of people know, everybody was overextended, my mother was overextended, and we basically had to liquidate the portfolio. So long story short, back in 2016, I left the United States to travel the world. I attempted to move to Berlin, wound up in Thailand, fell in love with my wife, got married, had a kid just recently last week. But in that time period, I wanted to get involved in commercial real estate back in America. I started listening to podcasts, started doing all this stuff, educating myself, didn't know when I was going to be back. I basically created a digital multifamily meetup, a digital real estate meetup group. Had about 10 people, ran that for about 3 months, and I developed and found a mentor who was not in the group, but liked the work that I was doing and connected me with Omar, who is the CEO of Boardwalk Wealth. And at that time, basically Boardwalk Wealth was grassroots. We're going on 2 years strong now, and has allowed me to basically transition myself into a multifamily guru. No, just kidding. I'm not a guru. Nobody says that, right? Nobody's like, nobody's like, I'm the guru, right? Everybody's like, that guy says he's a guru. But the guy that's the guru doesn't say he's a guru. I'm not a guru. But just transitioning myself to the next phase of my life and trying to, get into multifamily more and more, and just loving the ride and just experiencing things, halfway around the world. And that's kind of my general rundown right now.
Man, yeah, right now, exactly right now, because the journey continues. It just goes, and we talked before the interview, it's just, you have so many things going on right now. I mean, and will be more things going on in the future, because you talked about, moving away and stuff. So it's going to be exciting for you, man. I really looking forward to seeing you, doing big things, because again, sometimes you have to be in the right place physically actually to reach more people and to do great things and just expand your business in general. So I think that decision that you just, spoke before is going to open so many doors for you and just, explode your business for sure. So what about for people again, who are watching, cause everybody here tuned in for like, okay, I'm a simple guy, a girl, I'm like here for myself, kind of selfish. I want to learn about real estate investing, but I still have this full-time job. and, you know, like, I don't know how to even start this up. So, you know, any advice for people, you know, because you've probably been in similar position, how they can start educating or start, you know, real estate business, having a full-time job?
For sure. So if somebody has no prior experience in real estate, you know, whether that's fixing and flipping, being a landlord, owning a home, whatever have you, I always kind of equate it to working out, right? There's a million different ways to work out. You can do P90X, you can run marathons, you can be a bodybuilder, you can run, you can swim, whatever you want. There's a million different ways to exercise. But you kind of, after, you know, your life or the sports or whatever you've partaken in, you develop a strategy. I like working out Monday, Wednesday, Friday. I like doing cardio, blah, 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 blah. So I would say, you know, one, start educating yourself and kind of think about what you like, right? People are like, okay, I want passive income. I want to scale, multifamily. Other people are like, hey, I really like the BRRRR strategy. I like fixing and flipping homes. It's more rewarding for me. I like being more hands-on, blah, blah, blah. Some people are like, I don't want to do any of that. I just want to be a private investor. I want to give my money away. I want to do note investing. I want to do wholesaling. I don't have any money. I want to be a capital raiser. So kind of think about where you are in your life, right? In your journey, what you want to get involved in within real estate. Start to educate yourself a little bit, and then try and get your foot into that door. And then once you do, it'll kind of open up from there. So if you're thinking like, hey, I want to be a fix and flip properties, start educating yourself on that process. Maybe do a deal or two. You know, maybe you don't even actively participate in it, and you just like give people some money and they take your capital and put it to work there for you. But then from there, you kind of develop your strategy, right? You're like, okay, like, I do not like fixing and flipping. Like, I've been doing this for 6 months. I've been doing this for a year. Like, it's not for me. I can already see down the road, I'm not really about this life. So then it's like, okay, check, right? Maybe you move on to the next thing. But you never really know until you get started. And I think a lot of people get analysis by paralysis, and they think I have to know everything, and I have to know everything about the market. And okay, I want to invest in London, and I got to be there, and I got to walk the property, and I got to do this, and I got to have the perfect manager, I got to have the perfect girlfriend, and I have to have the perfect amount of money, and then my portfolio and everything will really come to fruition. And that's not the case. So I kind of say narrow down your niche and start kind of narrowing down what you want, and then begin taking baby steps, and from there you'll develop your own strategy.
Yeah, solid advice. Yeah, because, you know, again, real estate in my head, you know, looking from a side, because I'm not active in real estate, you know, besides working with all these different companies. So like I know a little bit of ins and outs on how the businesses work. You know, all that you mentioned: wholesaling, fix and flip, multifamily, you know, construction. But like what you mentioned is so true. And like, if people just narrow down to one thing and just, so what will be the first thing, you know, because you mentioned all these things. So if you just narrow down to this one thing, the first step in this business, like what would be, like, should I go like seminar or grab a book? Like, should I call somebody that's active in real estate? Like, what's the first step for somebody who's like, they don't know nothing about real estate?
Okay. Let me back it up a step.
Say that again?
Let me back it up. Let me back it up a step. So you have to do some introspection and look at yourself, right? So example being, if you are not an aggressive person, or if you don't have a strong temperament for risk, Bitcoin or cryptocurrency should not be for you, right? Hands down.
I don't think it should be for anybody.
Okay, well, that's your opinion, but okay, right? So that's your opinion. Now, let's say you are somebody that is willing to risk and likes the education process and is willing to learn. That person is probably more suited and has a stronger stomach for cryptocurrency, as opposed to you, who, if let's say you invested £1,000, would be like, yo, what the fuck? I don't know if I can cuss. Can I cuss?
Oh yeah, go ahead, man.
Okay. All right. Yeah. So yeah, you know, you might be like, yo, what the fuck? I don't know what I'm doing with my money. Like, I don't feel comfortable with this. 3 months and I'm out. And then maybe someone like myself, like, I understand this process. I really like this. I have the temperament for it. So I would say, learn your temperament and what you think you're comfortable with. So if you are wanting to be the sole GP or sole person of the ownership of an apartment building, and let's say, okay, you have to put up $1 million in capital or $2 million in capital in order to take down this property, and that's all your money. Are you going to feel comfortable putting all your capital at risk? Okay, maybe you're not whatsoever. That's perfectly fine. So then you're like, okay, well, I know I don't want to do that. What are you looking to invest? How much money do you have to invest? What are you looking to do? So if you're like, okay, listen, like I just kind of want a little bit of passive income. I want like, you know, I don't really like losing my money. I want just like $100, $200 a month recurring. And if I got one property a year, I'd kind of be cool with that. It's like, okay, that sounds like turnkey, you know, single family homes. There's a lot of that. You can actually get homes in Ohio, Memphis, parts of the country for $100,000. You probably have to put up $20,000. Oh, you have $20,000. Okay, well, like, let's explore these options. Okay, oh, wow, it is possible. Okay, and then you start doing some research from there. But if that same person who has the $20,000 is not wanting to be like hands-on real estate or, you know, scale their portfolio, invest in multifamily and larger syndications and have their money locked up, that $20,000 for 5 years as opposed to, you know, passive residual income coming in and slow increase in equity, I would say those are two different types of investments. So do some introspection as far as what are you comfortable in your risk. So if you're a risky person and you live like, not I wouldn't say a risky person, but if you're more comfortable with risk and, you know, you like more speculative, I'll say, investments, like you'll probably be more drawn to those as opposed to somebody who's like a bond investor and is comfortable with like a 2 to 3% return and is like, you know, a bit stagnant as opposed to like more volatility. So,
you know, sorry, I'm going to interrupt you for a second. Like, you know, like with this risk thing, which you mentioned, like Bitcoin, like cryptocurrency, like all of that, like it's same as a stock market. Like you have no predictions what's going to happen. Like I don't want that. Like I don't want the gamble. And I don't think people making an educated enough decision when investing into these like cryptocurrencies, because again, like there's no education. It's just a fashion thing. Like, oh, I got some Bitcoin. Like that's all it is, you know. Like
I beg to differ with that argument.
Yeah. So, you know, like everybody has their own like opinions on that. And, you know, there's people investing and doing well and like in a Bitcoin, like cryptos. But like, if you want to create this like wealth, like having Boardwalk Wealth, you want to like have this journey where you create the wealth, like you need a solid investment, which is like what real estate is, right? Like, of course there is risks involved into that as well, but it's not volatile as a stock market or, you know, crypto. So
and to kind of put this together, you know, like if we're talking about, you know, cryptocurrency and whatnot, it's like, you know, it could be right for somebody, it could not be right for somebody else. And just like you're saying, cryptocurrency is a fad. It does not mean that it's not. It does not have longevity or there's not good enough returns. Like in 2017,
yeah, agree.
It went up, right? Like you can't deny with the numbers, but then it came down. Now that's not saying that it's a bad investment. It's just volatile. Now it could stabilize in the future, right? And yada yada yada. But the weekends are going to shake out. So it's what you're saying is kind of a trend. Same thing with real estate. It's like multifamily, and now everybody's like, yeah, the market's hot, right? Or it was like maybe 5 years ago, it's like burr strategy. And then in 5-6 years, it's going to be like condos. Get the condo, flip the condo, right? And everybody's like, oh, condos. And so these things come in cycles. So just as much as you're talking about trends in a different market, there's trends in the real estate market. It's like, yo, multifamily's hot. Let's get into multifamily. Like, ooh, market's about to bust. Nobody get out of fix and flip. No money in fix and flip. Like it's harder to get deals. You know, 10 years ago, oh yeah, we're gangbusters, right?
Yeah.
So,
but the question is, how do you see around what's going to happen around the corner? Because most of the time people just start like moving to a new asset class a little bit too late. So
I think like it's just like anything, man. Like I was kind of saying, like you got to kind of start educating yourself, feel like what your investment strategy is, and then you got to get in there. Because until you get in there, I mean, look, let's just go back to running the marathon. I've run 5 marathons. There's I couldn't even tell you. I ran the LA Marathon, I think 3 times. And I think there's like 60,000 people that run it. And there's no people that are like, I mean, people have different strategies. They run 10 minutes, they walk 3 minutes. They run 10 minutes, they walk 2 minutes. They sprint the whole time. There's people that qualify for the Boston Marathon. There's people that walk the whole thing. And so there's no one way to do one type of asset investing, right? Somebody that's going to be doing value add opportunities and investing is going to be doing and managing that properly and have different systems in play as opposed to Boardwalk Wealth, as opposed to, 5 other different sponsors. And somebody who fixes and flips properties might focus strictly on the kitchen, and somebody else might focus putting on the 3rd bedroom and, doing the BRRRR strategy. But I think until you really get in, and you won't see around the corner, like, how you and I talked about Kobe Bryant, it's like, he's been shooting threes, whatever, for millions of years, right? And now he's really good at it. But there's not the same defender that's coming at him. It's a different guy, different size, different move, different. It's just like kind of a feel. You're like, okay, like I see the kind of like my team, like I got my team, like, okay, I got some money, and oh shit, opportunity, hello. Okay, now I'm gonna like kind of invest in this and capture it. But the people that aren't open-minded and people that don't have the systems in play and people that aren't out there trying it, they're always waiting for the correction to get in. Yeah. They're waiting for the opportunity to open up. Yeah. So like examples, like when they say, when you think something's going to happen, the market usually goes the other way, right? And the market doesn't give a fuck about you. So if the market wants to go on for another 5 years, like it can go on for another 5 years, regardless of whatever Matthew thinks. So the time to probably get into cryptocurrency or Bitcoin was maybe when it was $3,500, not $19,000. So if you got in down low and now you're up here, well, now it's $10,000. You made $7,000. Who looks like a genius? But if you got in up top and you sold at the bottom, you look bad. Or if you're like my mom and you have 10 single family homes and then you liquidate those, then well, now you wouldn't belly up, right? And my mom told me whatever, like last year, she said, man, especially in the Denver market, she's like, if I didn't sell any of those properties, she's like, I would be doing very, very well.
Right? Just based on appreciation.
Yeah. And I was like, yeah, you would be killing it. And she's like, but at the time I was so stressed out and, you're up to Schitt's Creek, and I understand. I don't blame her at all.
Yeah. So, it's all coming back again, sorry for interrupting, but I think it's all what you're talking about and with people listening, and it's all coming back to the risk tolerance, which you mentioned before. Like all these, are you going to be investing in the top or the bottom? It all comes down. Are you willing to go like in the front row and say, okay, maybe people not seeing that, but I'm just going to, because I'm making educated enough decision, and that's what it comes down to. Like if you're educated enough, but there has to be some experience involved, because I think the big players, they're always going to be ahead of the time. Other people who are going to be investing because they have experience, they have the team, they have years and, So that's going to be that. But, so I think if people just surround themselves like you did, with Omar and Boardwalk Wealth, where all these people, they're making educated decisions. They've been in business for a long time. I mean, 1,257 units. Yeah. So that's a proven track record that people know exactly what they do, and they make smart decisions. So that definitely. 100%. So what about, I just want to, just to touch one point, because you mentioned people waiting for this, market crash, and everybody's experts talking is going to happen this year, next year. Like nobody knows, nobody has a crystal ball. But what about investing into apartment communities right now? Because again, you mentioned there's a lot of people like new multifamily syndicators like popping up like mushrooms every day. Like I see on Facebook groups, and like everybody's a syndicator now, because again, it's a trend, right? Everybody wants to go there, raise capital, and acquire these deals. But is it the right time right now? Because again, we're at the top of the market, and like nobody knows when it's going to shift. So that means a lot of people who are coming in brand new again and don't have maybe the right team or, experience. I mean, you can get like hammered, so is it the right time, or people should wait it out until, until
you should go in. I mean, the more competition, the better, right? And the market will determine that. So if you're a young buck and you're 22 years old and you're coming in and you're killing it, and you're the deals, the money, that's going to come your way, right? That, as opposed to Joe Schmo, who's been in here 4, 5, 6, maybe 7 years, who is not like a really good syndicator. Like, I'm a firm believer of don't wait, like get in now. And if you're in now, while the honey's good, right? When it goes belly up, who do you think is going to be more in a position to recognize those opportunities?
Yep.
Because calm sea is never made for a good sailor. So if you've been through the highs and the lows, and it's like, okay, you've been through some different cycles, like I feel comfortable investing with that guy, as opposed to like, okay, now we're at the complete bottom. Now you're trying to raise capital. Now you're trying to talk about deals. It's like, and what happens in the markets is when there is a recession, people take their chips off the table, right? Not they're tightening up their investments. So people aren't going to be investing in apartment syndicators or trusting new people with capital when it's like, oh, okay, like my kid's trying to go to college. Actually, this 10,000, like I was willing to deploy it and have it be a little bit risky, but now like I want to park this in like with a safe, secure sponsor who I know has proven track record. Okay, you've been in it for 3 years, okay, as opposed to like that same guy, version B, who's just starting now, making the same pitch, like, hey, Uncle John, blah, blah, blah. You're like, yeah, it sounds good, but like, I don't feel comfortable with you. Like 3 years ago, I might have like, we've had a relationship and now it's kind of developed. So I would say start now.
Definitely. I do agree, because like when we talk about the highs and the lows, like right now it's harder to find the good deals and the capital is available because the money's there. And in the downturn is going to be what? There's probably more deals and less capital. So, I mean, yeah, definitely great point, starting now and, but there's, again, it's multifamily syndication, a lot of moving pieces. So again, like people have to get educated, get the education first. But I mean, I don't know, maybe you're watching and you're thinking like multifamily is not my thing. So whatever, like, there's different asset classes that you can start on and, you should be good. So, okay. So what about being a market research, due diligence, acquisitions, and investor relations guy? Can you just tell your own personal opinion? What type of multifamily property would you buy personally right now in the States? What will be your investment criteria, kind of?
So, I mean, for Boardwalk Wealth, we usually invest in 1 to 200 units, B2C class properties, purchase price between 5 to 15 million, or 5 to 20 million. We look for markets between 10 to 20 properties between 10 to 15% below market. And we usually focus on the southeastern corridor, Jacksonville, Florida, Atlanta, anything really there in the Bible Belt, Texas. I would say if I were going to be a sponsor and I was looking to be an out-of-state investor, I would first off focus on investing into a landlord-friendly state, first off. That doesn't mean you have to be purchasing multifamily apartments, but in general, if I were to be purchasing a turnkey property for a single family home or anything, I would be looking to invest in a landlord-friendly state. So that's the first thing that I would look for. As far as the second part to that question, I would kind of turn back to say, like, what is your risk tolerance? So if you're looking for passive income and you want to be completely hands-off and you're an accredited investor and you're looking to 2x your money within 3 to 5 years and you're comfortable with a sponsor, that probably would sound like a good route for you. But if you're looking to be more hands-on and you're looking to do 1 or 2 deals, single family, fix and flip, BRRRR strategy, house hacking, those could be definitely advantageous for you if you want to start getting your feet in the game. Because I mean, let's say you hear all this stuff on social media and you think, oh, supermodel. I want a supermodel girlfriend. I want her to be banging hot. Like, oh man, I want to do this. Like, it's gonna be just one of the best girlfriends. Like, dude, you haven't even been on a date. Like, do you know how to pick up a girl? Like, do you know how to go out to like eat, have a casual conversation? Like, what, it's like it's like a training method. Like, these are baby steps. Like, not saying you can't be there, Junior, but like, hey, just like go have fun with the girl. Like, you don't even hold a hand. Like, just talk. You don't have to be like holding out for the playmate of the year, right? So, really, just going back to getting out there, developing your own strategy, and I would just say focus on a landlord-friendly state and kind of develop your strategy from there.
Yeah, awesome. Definitely great point. I mean, there's a lot stuff going on, like, because every time I talk with somebody like yourself, having real estate people like on these podcasts, I hope you guys enjoy. Again, if you enjoy, click like, subscribe. But everybody's mentioning this one thing, and when you talk about that, this like reaching for that supermodel instead of taking the baby steps, like everybody's talking the mindset, like 80%, like real estate investing is the mindset thing. And like all these false perspectives, because when you said that, I just in my head it sounded like people saying, if you're gonna reach for the stars, you won't make it, you're gonna land on the moon, or something like that, like stupid like quotes, right? Like, and that's what people do. They have all these false perspectives, thinking, no, I should go for a supermodel, I don't have any skill set, I never been with a girl before, but I should go for that. And it's all like dumb, it's a dumb stuff. So like people should understand, like, baby steps, everything is baby steps. Like if you want to like start a podcast, baby steps. You want to get invested into real estate actively, passively, baby steps. Like, so there's no other way around, to that.
Sure.
So okay, so what about, again, because I included this, I told you I'm going to be including, can we touch just, because you mentioned you've been on the GP side on a deal, maybe you can talk about the deal, and what did you learn from that being on a GP side?
Yeah, so we recently closed a 198 unit in Fayetteville, Georgia, right before Christmas. What I have learned thus far is how many moving parts there really are, and how much capital it really takes, and learning about the investors and how they are being spoken to, right? It's one thing to like read a book, but when you're actually talking to accredited investors and emails and, for myself, right? Like Matthew, non-real estate, non-professional, I would always like say like, hey, Martinez, like, make it a great day, smiley face, right? Like, yeah, like, hey. And so like these guys, right, they're more guys and gals, they're more business professional, right? Doctors, lawyers, and they're used to just like
sophisticated talk,
just like straight jargon, like if you're filling out a form and it's like, I remember Austin Powers, right? This back in the day, he was like, whatever movie it was, is like, he's filling out a form and it said like sex, like male, female, and it was like, he's like, sex one time, and he made this like joke, right? This is like, he just makes a joke about that. It was kind of funny. I think about that sometimes. It's like, well, it's strictly just like male, female, check the box, right? Like people just want straight jargon, like, please fill out the forms, have it to me by Monday, at your earliest regards, much appreciated. Let me know if you have any questions. And like, it's like, boom, and they'll give you like a straight answer back. And sometimes when like you're sending an email, you're like, ooh, like I feel like I'm being pushy, I'm kind of being a dick. But there's like kind of better ways to start like wording things and making things sound more business professional. And for me, that's new. So dealing with accredited investors, I would say business professional, business communication is more going to drive home the point, as opposed to me being Matthew. It's like, I got to get into like real estate, GP, investor mode, as opposed to like buddy, chum it up. Like, hey, okay, cool. Yeah, whenever you get it to me, that sounds great. As opposed to like, hey, we need these by this time. Thank you. Earliest regards. Here's my email. Contact. Send. So yeah, I've just really learned a lot about the capital side of how things are really structured.
Yeah, awesome. You're gonna learn so much more moving forward. I mean, you did so many great, amazing things with Omar and the company, and it's just exciting, man, to see you on this journey as well. It's awesome. Just look from the side and see where you're going. So beautiful. So what about people who are, again, coming back to the people who are watching this brand new and they think, okay, maybe I have some extra capital, maybe I'm not a high net worth individual, but I got some money, or maybe I can raise some from family members and so forth. What about for them? Okay, I'm gonna buy this deal. Let's say it's gonna be a fourplex, and I'm just gonna run it by myself. There's a lot of people talking like, I'm gonna live in one unit, I'm gonna rent out 3, like I'm gonna self-manage. Like, is that an option? What do you think? Like, what's the best way to start this off? Like, should they go and manage properties themselves, or just get the management company to do them for them instead?
Again, I would say, really I didn't plan on this episode being like this, or like I'm like this wise investor, but really think about like going back to like, what do you really want? Like who you are, your strategy. And if you're trying to be hands-on and you want to be a landlord, that's perfectly fine. Nope. There's no knock on that at all, right? So if you're going to buy a fourplex or a quad unit, right, and you're going to live in one, you're going to house hack, like, hey, cool, no problem, like good on you, right? But you're going to be living in one of those 4 units. Now, if you buy like a 12-unit apartment complex, 16-unit apartment complex, and you want to do that for your first deal, okay, that's no problem. Can you hire a manager? Yeah, you can. But you also got to take into account too, like that is going to take away from your bottom line. So you will be the manager. Or
how much? Sorry, how much what do you think it would be on a 12 unit or 16 units, like percentage wise? What will be the management? It's not going to be 3%. It's going to be much more because it's too small, right?
Yeah, I honestly don't know. I haven't dabbled in that. I would say that I would expect them maybe to take, I don't know how they would structure that. A percentage of the gross rents, or because they're not going to be on site. So I don't know. I couldn't speak to that. But let's just say it's 8% of gross rents or 10% of gross rents, maybe something like that, right? That's 10%. So that's coming out of your pocket of your net, possibly, right? So if you want to run the property, yes, you're going to be more hands-on. You're going to be there, but
I mean, you have to pay yourself. Like you have to pay yourself because the time is there, so you spend the time.
Yeah. So then, if you're thinking like, hey, I wanna be as free as possible. I want to go travel the world. I want to collect some passive income and blah 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 blah. Right? I mean, that's not aligning with your views. Or if you're like, hey, I want to get a duplex, rent out to one solid owner, and then I want to use that to pay half my rent, and then I want to go travel the world. Well, if you're screening and you have one tenant to put in a duplex and you know this person or they're a really cool person, odds are they're probably not going to be a big headache because you live on the other side. Like it's going to be easy peasy. It allows you to live and allows you to travel, allows you to do these things. That sounds more incongruent with your vision, your returns, and who you are as a person, as opposed to someone that says like, I don't want to be hands-on, but I'm going to be a property manager on a 12-unit apartment complex. Like, it sounds like a recipe already for disaster. Like a girl that's a vegetarian, you're taking her to a steakhouse for her first dinner. Like, like you might go well, but it's like it's first date. But
there's gonna be some risk involved over there. Yeah,
there's gonna be some risk, but hopefully it works out.
Definitely, great point. Yeah, because like we coming back to this point, like what is your like strategy? What is the lifestyle that you want to live at the end? Because like real estate can definitely create you that lifestyle. Like even myself looking like I'm not invested actively passively to any deals right now, but we definitely looking in the near future because it's one of those things that can help you create the lifestyle that you want. And at the end of the day, like when we gonna go, like I think for me personally, I don't know, how do you feel, or the people who are watching, maybe you can leave a comment, like what will be the reason for you to invest in real estate? But for me, it will be kind of, okay, like we're gonna remember the things that we did, like the people that we impacted, the places that we went. It doesn't mean that I will go alone. Impact, travel, like all the experiences that we're gonna have in life. It's not gonna be how much money I collected, but like in this earth that we live in, like we need money to do things and to impact people and to make a change. So instead of, so that's why I think like real estate is such a great vehicle. So you can do these type of things to a big scale. Of course, you have to put up, like, what's the minimum investment with the Boardwalk Wealth at the moment?
50K. Yeah, 50,000.
50K. Got it. So here you go. Yeah, definitely. I see it like it's a must. It's not a shit. Invest it.
And also too, like I know we are talking about real estate. But real estate's just as trendy as the stock market, right? And like these things, like I said, they do come in cycles. So if you are listening to this and you feel like, I mean, yes, I am a real estate guy, but if you feel like I don't want to be involved in real estate, I want to invest in my own business, like that's perfectly acceptable as well. I think basically the bottom line that people should take from this episode is like, don't wait, don't have hesitancy. And if you want to invest in fixing and flipping boats, like I'm sure there's a market there for that. I don't know anything about that, but when you're sitting off on the sidelines, not producing content, not out there, on any form of doing anything, you're really doing yourself a disservice and not being the most impactful person that you can be. And if you're not living, your most impactful spirit or person, whatever, aura, or whatever you want to call it, you're really doing the world a disservice, because a lot of people that can't speak or can't dance or can't write or can't walk or can't talk or can't eat would kill for that opportunity to do those things. And for you to have a voice or for you to have a vision and not capitalize on that opportunity is really doing you and the world and the universe a disservice. So really you should get out there and make an impact.
Yeah, beautiful, beautiful. And again, I just seen your wife coming up, and you said 10 minutes. So I'm gonna just cut to the chase. I'm gonna go to a few more questions, if you don't mind.
Yeah,
pretty quick, because I know it's Saturday. I don't want to take your family time away from you.
No problem.
Yeah. But can we talk about the 2020 again? Beautiful year, beautiful number, and I wish you a lot of great luck in this year. Again, we talked about this year started a little bit weird, but it's going to continue good, I'm sure. So can you talk about your personal or business goals for this year?
Yeah. So my business goals, I'm really focusing now on taking my podcast to the next level. That's my next thing. I want to develop that and get that to the next stage where I can start making some money. And I don't want to necessarily put a dollar figure on it. I just want to get better. And I'm thinking more of like where my podcast will be like 5, 10, 7 years down the line, right? So if my investing becomes better and my podcast becomes better, like those things are just going to kind of align with themselves. So right now I'm kind of focusing on really getting my podcast better. Therefore, if my podcast becomes better, I'll be able to make more money, which I'll be able to attract more investors, be able to attract more capital. And plus I'll be moving back to the States. So for me, scaling up on my podcast would be one of the top ones. And then also too, I want to be a GP on 2 more deals by the time that I go back. So if I'm able to do that, I think I will feel very, how should I say it, very comfortable when I'm moving back to the States, as opposed to like nervous and like, moving my family halfway around the world. Like, okay, was this the right decision? Like, I'm sitting in my new house, like we're good. Like things are great, right? But I think things could be a lot better for us. And, like you're saying, like going back to America, like I could definitely go back, develop myself more, attract some more investors, and build up more of a portfolio. And then 6 years later, I can travel and leave the world and go do more. I can always go back, right? But I think for the time being, like going back to America and really like riding this ship and getting in on the ground good, because where I'm at right now, I'm in with a good company. I'm learning a lot. I'm making some money and things are going well. So those are my business priorities right now.
Awesome. Yeah, great goals, definitely. Okay, so can we finish off with this? I mean, people like if you don't see Matthew so far on any social media, he's gonna give you a few places that you can go and visit him and talk with him. Like if you have any questions, you wanna jump, you have a real estate business, you wanna jump on a podcast, talk some real estate. I think this is your guy to go to. So can you share with people where they can find you on social media?
Yeah. So you could, so first off, you can find most of my content on my website at MatthewBaltzell.com, MatthewBaltzell, B as in boy, ALTZL.com. But other than that, it's pretty simple across the board. LinkedIn, Matthew Baltzell, Instagram, Matthew Baltzell. So where you ever really want to connect with me, I'd say Instagram or my website. And I also have top 400 business podcasts called Real Estate Journeys. And that's on my website as well. That's on iTunes, Stitcher, Spotify, Google Play, whatever you want.
All over the place. Yeah. This man is definitely all over the place, and you should definitely check him out. And really appreciate the time spending with me today. It's always great vibe, connecting back with you and just
talking. Sure, man.
So it's a pleasure talking and seeing you again, this year, and hopefully it's not going to be the last time I see you this year. So, we can make something happen again. And I'm just, excited every time again talking with you. So guys, if you enjoyed this episode, you know what to do. I mean, you're smart people, like, subscribe, share it with your friends so more people can learn about real estate investing and to start their own real estate journey, because it's definitely a beautiful thing. Right time, just, do the right things. First of all, educate yourself. So I think, Matthew just gave out a lot of great valuable content for you to go and build the solid fundamentals, for education. So again, if you have more in-depth questions, contact with them at all the links down below, and I'll see you in the next episode. Thanks, Matthew. Appreciate it.